Welcome to this series, or should I call it an episode actually. What is price action is one of the most important questions that you need to ask yourself first of all, because now we're going to be talking about the core principles of price action trading. First, you have to know what price action is before you can then think of the principles. Now, what is price action? I'll simply put, price action describes the characteristics of a security's price movement, which is price changes. Like if the price should move from one price level to another price level, it simply means that the price has changed. And that is what price action is. It simply means that the price is moving with respect to time. So price action forms the basics for all price action forms the base for all technical analysis, right? Now, when we talk of technical analysis, we are basically talking of price action. When we talk of technical analysis, we are basically talking of price action, how the market is moving. Every technical indicator that you see out there was designed from a price action, was designed off a price action. Something was done. Probably you can say it's an automation of this particular strategy. But at the end of the day, it is obvious that it was designed from price action. So they have to study price to know how the market moves, to be able to design this so let's continue. Why do you need to understand price action? Of course, for anything, you have to know why you are learning that skill, or you have to know why you are learning that particular craft. Now, why do we need to learn price action? You must be able to read the charts as it is. So that's one of the main reasons why we are learning price action. Some persons use indicators to trade. I call that, like, some persons use a system of indicators to trade. They will wait for the indicators to give them signals to buy and sell. Those indicators were actually designed from a price action. Okay, they were actually designed from price action studies. The persons that designed those indicators actually study price over time and then design those indicators. Okay, now for you to be able to read the charts independent of whether there is indicators, you will be able to make a lot of money from doing that. Okay, so that's why number one, you must be able to read the chart as it is. Number two, to understand technical analysis formations, that is chart patterns and how the trends are formed. You need to understand how the market is moving, how the trend is forming, how does the market start a trend, how does it begin a trend, what is it, how do I know that this is a trend, or how do I know that the market is trending or not? For those of us who don't know what a trend is simply when a market is putting up a movement either to the upside or to the downside, giving us a series of higher highs and higher lows, or series of lower highs and then lower lows for a downtrend. Like we all know, there are two phases in the market. Number one, a bullish phase, and number two, a bearish phase. The fact remains, the market is either going up or down, guys. So don't mind that phase out just so. The price chart, the price is either going up or it's going down. Even when it's going sideways, when we say it's in an equilibrium state, for some period of time, it will go up, and then for some period of time, it will also go down. So that is how the market moves, and that is how it's designed to move. All right. So technical indicators are also calculated from price action. That means you need to understand how the price moves. We talked about that already. Now, many traders use candlesticks to understand or to interpret the market, because it is easier to use candlesticks to interpret the market. Now, with the help of price action and candlestick as well, you'll be able to interpret the market easily. Okay? You'll be able to interpret the market easily, and you'll be able to understand the term price action easily. All right, to next slide. Now, to core principles of price action trading. Please pay attention. If you have a pen, I will advise you to write certain things down, because I'll be talking about a lot of things when it comes to this slide. Okay, this is the main reason why we are having this meeting tonight, the core principles of price action trading. And so many persons don't know these things. They don't know what to take as important and what is not important. Some things are not as important as you take them to be. Certain things are important, and those are the things I want to talk about tonight. So number one principle of price action trading is price versus time. The chart is one of the most important things when it comes to price action trading. So you must understand the charts, how it moves with time. You must understand the market sessions. Now, if you don't know the market sessions, don't even bother to use price action. Okay. If you don't know the market session, don't bother using price action. Without the market sessions, you never will succeed using price actions because you don't know the times of the day that the market is likely to have enough volume. Okay. You don't know the time of the day that the markets are likely to have enough momentum. So I'm saying it because it's a necessity. You actually need to understand the market sessions. That is, if you look at the chart very well, guys, you notice that the chart is a graph of price against time. We have time below, and then we have price on the y-axis, and then time on the x-axis. Price that's on the right hand side of your chart. Now, the market moves with time. So if you don't understand the times of the day, that there are so much activities in the market, you never would succeed. I'm telling you this, you never would succeed. So you need to understand the market sessions. You need to know the time of the day that are going to be volumes in the market. And I'll be telling you there are there are three market sessions. There are three sessions in the market. Number one, we have the Asia session, which is actually the first section at every given day. It's actually the first session. Remember that the market is open 5 days a week. That is 5 days a week. That's 24 5, not 24/7. So when the market opens on Sunday, guys, when the market opens on Sunday, it opens around when it comes to Nigeria time around 10 p.m. on Sunday or 11 p.m. as the time zone may elapse. Now, when the market opens, it opens with the Asia session, and this is a session where there is less volume in the market. You will barely see movements during the Asian session. You'll just only see that the market is moving sideways, it's consolidating during the Asian session. Now, what is best to do during the Asian session as a Nigerian? I actually advise people to sleep. When it's Asia session, there is no much activity, and the best thing you can do for yourself is to sleep at that point in time. Okay, just sleep. There's no need bothering yourself looking for signals on the chart or looking for trades on the chart. And then the next session is the London session, which is one of the most important sessions in the forex market. It's during this session that the market moves a lot. Okay, so you want to be widely awake by 8 a.m. in the morning Nigeria time. So you have to be on your charts before, let's say before 7:30. You have to be on your chart so that you can analyze your charts and plan your trades beforehand. So without that, you won't make money if you just jump in on the charts and then start to look at the charts around 8:30, 9 o'clock. No, market will just start to catch you unaware. You see unusual spikes up and you might jump in on the wrong spot. So you need to be on your charts before 8 a.m. in the morning. If you really want to trade the London session, you must be on your charts before 8 a.m. in the morning. Now, if you have a busy schedule and you go to work, or probably you work and you trade forex as a passive income or as a side hustle, now you can trade the US session. The US session is open from 1:30 to 2 o'clock in the afternoon Nigeria time. Okay, if you're in other countries, you can convert my time to your time, and then you know what I'm talking about. So if you're in the UK, that's still the same time. It's just GMT +1, guys. So guys, the next one is actually turning points in the market. Now, so many places I've seen people trying to catch the top and bottom. When I say turning point, I'm not trying to tell you that you must catch the exact turning points in the market. What I'm simply saying is that you need to identify if the market was going up, okay, and then it takes a pause and pulls back. You need to identify where the market is going to stop before it continues its new trend. And that is what I call turning point. In price action, one of the principles is that if you find turning point and apply proper risk management, you're definitely going to come out a successful trader. Okay, so turning point is one of the most important things that you actually need to understand at every point in time, guys. At every point in time. Now, how do we understand turning points? I'll bring you into that in a few minutes. Now, number 3, we have confluence. Once you find the turning point, you need to find a reason to take a trade. Now, you don't need to force a reason. You don't have to force a reason, guys. You need to find a reason on the charts to either take a buy or a sell. Now, in the forex market, there are only 2 orders that you can place, or let me call it 3. Number 1 is either you're buying, secondly is either you are selling, and thirdly is either you are staying sideline. When I say sideline, it means you are neither buying nor selling. So you have to be doing one of the 3, which means that if you are not buying, you should be selling, and if you are not selling, you should be staying on the sideline, guys. Now you need good reasons to take a trade, not one reason, not two reasons. I usually say a minimum of 3 reasons would make you a profitable trader. Okay. Some of this confluence, if you're an intermediate trader, some of this confluence can be your order blocks. If you're SMC trader, your order block, your fair value gap, probably price sitting at your fair value gap is sitting at a discount or a premium level, or it's probably you can combine that with the time of the day. Okay, so these things are very, very important, guys. These are very, very important. So if you are trading pure price action, which I trade, you can be looking at your trend line, your support resistance, your demand supply zone, and your Fibonacci, just like that. So, guys, the next point, money management. Now, if you really want to succeed in price action trading, if you want to succeed, you need proper money management. Being able to read the candles is not enough. Okay. Now, this is a book recommendation for us tonight. A book recommendation. If you have not read the Candlestick Trading Bible, please go and get the book. The Candlestick Trading Bible. It's a very good book. It will teach you the anatomy of candlesticks. It will make you understand how these candlesticks are interpreted or what they mean in the marketplace. Okay. So you need to get the book, the Candlestick Trading Bible. You can download it online. You can go on PDF drive and download it. So money management is very, very essential. The importance of risk management, stroke money management, can never be overemphasized. You need to take your money management strictly, guys. So if you have a good money management scheme, there is no way you will not succeed in the market. If you do not succeed and you have a good money management scheme, just come and arrest me in my house, guys. I'm being serious right now, because that was a game changer for me, money management. Now, the market is always going to be presenting you with opportunities. When I say opportunities, I mean signals to take buys, to take sell. You are always going to see these signals. Now, the point is, Forex or trading is not a, what should I call it? Okay, Forex or trading is a numbers game. Okay, it's not a game where it's a must or it's a sure odd or whatsoever thing you want to call it. It is a numbers game. And here's what I mean by a numbers game. It is a game of probability, guys. It is a game of probability. And that's why so many persons liken it to be gambling. Even professional traders can call it gambling. And it doesn't really matter to me whatsoever you call it. But I know that when you have an edge in the market, see, like there is a quote in the Forex market that says that it is better for you to be the casino rather than for you to be the gambler. Okay? The casino or like for example, Bet Nigeria, we all know Bet Nigeria, a betting platform or a betting site. They never go at loss. That's one thing I'm sure of. It's a very, very rich company. The reason why they don't go at loss is because they are not the gamblers. They are the one giving out the odds for people to gamble into. Okay, so it's better for you as a forex trader to be the casino, be the market, like be the, how do I put it now? It's better for you to just be on the side of the winning team rather than just gambling your money away, guys. Okay, so forex is a numbers game. You can take 100 trades and win 70 trades and lose 30 trades. Now, the way the trades are going to come, the way the wins and losses are going to come is going to be in a random fashion. So you don't expect 70 wins straight or 30 losses straight. No, it's going to come in a random fashion, which means you can win 2, lose 3, win 5, lose 1, win just like that. That's how those numbers are going to play out. So if you don't use proper risk management or money management scheme, here's what's going to happen. If your first trade is going to be a loss, probably you don't know that trade was going to be a loss. Probably you made some silly mistakes reading the charts, and then that trade turns out to be a loss. If you put all of your money at once to that trade, trusting the analysis, I'm so sure that you blow your account. You will lose all of your money because you did not use proper risk management. The goal of price action trading is to practice proper risk management so that you can win in the long run. Okay? You can win in the long run. Now, you don't have to rate yourself based on every trade. That's why so many persons are married to a single trade. I hate the idea of being married to a single trade. You don't ever want to be a victim of that. Don't ever marry a trade. Once you take a trade, it's either going to be a win or a loss, and just allow the probability play out. And in the nearest future, you just see yourself being profitable, and that's what we call consistency. Consistency simply means executing your trades. That's what consistency is all about. Execute every single time. Every single time you find your setup, every single time you find your signal, just execute without wasting time, guys. Without wasting time, just execute. Now, becoming a price action expert. Now, this part is very, very important, and I felt I needed to talk about it, and that's why I wrote it down. Becoming a price action expert. So many persons have been trading price action, yet they are not profitable. There are certain things that they are still doing wrong, that when they start doing them right, they will start seeing profitability in the market. Now, just as any other profession, Forex is also a profession. I mean, a difficult one at that, guys. Forex is like, though it's not like rocket science, guys, but it's still a difficult profession. And that's why so many traders fail in this industry. Okay. The number of traders that fail in this industry is so alarming, guys. More than 90% of traders fail. That's a fact. That's a fact, guys. They think they are smart and they think they can do it. So they don't do due diligence. They don't do the necessary things. Now, as it takes a minimum of 5 years to study engineering in school and a minimum of 4 years to study a commercial course, it will typically take around 1 year for someone to learn to trade Forex. And taking 1 year now doesn't mean that you learn the nook and cranny of Forex. No. Okay. 1 year is just to learn the rudiments of the market, the basics, everything about the market, how it functions, how it works, your trading platforms, what is a demo account, what is a PIP, what is a lot size, what is risk management, and all of that. It's going to take you 1 year. Why do I say it's going to take you 1 year? It's simply because if you consistently read your books, take your trading seriously, take it as a career, take it as a business, and keep doing your due diligence. In 1 year, trust me, guys, in 1 year, you'll be able to learn what a PIP is. You'll be able to learn what trend line is. You'll be able to learn what lot size. You'll be able to learn leverage. You'll be able to learn every single terminology used in the Forex market. You can learn them in less than a year. Okay, so that's why I said it can take you around 1 year to learn Forex. Now, learning price action. Now, when it comes to price action, being that the markets are dynamic, learning price action is a never-ending journey. Okay, learning price action, the never-ending.
Outside, it says we're closed.
Why do I say that? Why do I say that is a never-ending journey? It's simply because I know that the markets are dynamic. So you are constantly going to be seeing new things in the marketplace. And when you see new things in the marketplace, if you're not familiar with those things, how do you cope? That's the question for you. How do you cope when you're not familiar with what you see? So it's a never-ending journey of learning. You just keep learning price action. You keep looking at the charts and you keep seeing new things. Probably the market did this today and it did this last week. Okay, it's repeating what it did last week. Okay, that is what it's all about. All you need to keep up with the market is patience, guys. And when I say patience, wait for something you are familiar with. When you see something, you document it down. Okay, forward test what you have seen. If it happens again, wait patiently for the setup to come alive. Okay, so many persons will trade premature setups. That's why you see people enter the market, they get stopped out. Probably they put their stop loss in a self trade, they put their stop loss above, and then the market stops them out and start pushing all the way down. Why does this happen a lot of the time? Because of premature entries. These guys are impatient. They are very, very impatient, guys. So if you want to succeed in price action trading, you have to be patient. This is why. How I trade, I look for levels in the market. I look for key levels in the market. I look for psychological numbers in the market. I look for levels where I know that other traders are looking at this level. An important area of interest is what I look at every given time. Why do I do that? Simply because I know that so many other traders would want to do the same. Please let me plug it from there, please. Let me plug it. So many other traders would want to do the same. Buy from the level that I'm watching, sell from the levels I'm watching. Probably recently, in the recent years, there've been SMC out there. So they will tell you the banks are waiting here. Those are the things I'm talking about. If you can't wait for price to go into an order block, guys, you are not ready to trade. If you can't wait for the price to go back to a fair value gap, something you understand before you start taking your trade, then you can't trade. If I cannot wait, I don't trade SMC, guys. If I cannot wait for price to go back to my trend line, then I'm not ready to trade. Okay. If I cannot wait for price to go back to probably my support or my key level or key support area, then I'm not ready to be a forex trader. So patience is very, very important. When you see a setup cooking, you have to patiently wait for it to cook, because so many persons jump into the market because of one thing. We call it FOMO, fear of missing out. They are like, okay, guys, if you can understand this simple truth that the forex market moves in waves, and even though it shoots up, it will gradually come back down. There is no market that's ever shot to the upside that did not come back at least 50% of its moves. So if you missed the first impulse, you can always get in again. So there is no point in trying to jump into a trade. I remember just 2 months ago, I also made that mistake. I was trading USD card. That's US dollar against the Canadian dollar. And I saw a huge move in the market, like a very rapid move, like a spike. And the next thing I did was to jump in. And as soon as I jumped in, the market started going down. I'm like, guy, I've just made a mistake that I'm not supposed to make at this point of my trading career. But I know it's something that I see that something that you might not really fully overcome it. But at every point you make that mistake, try to write it down, try to avoid it next time, so that the number of times you make it mistakes will begin to reduce, guys. Will begin to reduce. The most important thing when it comes to trading is patience. It's patience, guys. I can't stress this enough. I think I've made my point. Now, master the habit of journaling. Master the habit of journaling. I have my books, like I have a lot of books in my house where I've written a lot of things concerning the market, concerning the charts. That's why I have patterns of my own now. Okay. I know that I actually learned forex from materials, from YouTube, from friends that posted something, and then I decided to look deep from people's analysis. Yes, I learned forex a lot from people's analysis, like other person's analysis. How did I do that? Like if somebody posts a chart, probably I'm not even trading a strategy. I'll just make sure I try to look at why it took a sell. What was he looking at? Why was he looking at that? And hey, so you can learn from that as well. So keeping a journal help you to know what you are doing right, help you to know what you are doing wrong, help you to know where you need to advance or where you need to add more effort. Okay, where you need to put more effort. So that has helped me a lot. Keeping a journal, it literally helps me a lot. Write down your mistakes and keep a journal. Exactly. Thanks a lot, Mr. Jimmy. Thanks a lot. Write down your mistakes, keep a journal. Write down, even see whether I win a trade or not, I still write something down most of the time. Like whether it's a win, I will still want to write something down. Like what happened? How did I manage my emotions? That's also very important. How you manage your emotions when you're on a trade. Because sometimes I've noticed that for me, most of the times I've noticed that I'm saying this out there so that you can know that it's not only you that's going through it. Most of the times when I'm in profit, I tend to think that I need to get out quick because I'm scared the market might reverse. And it happens sometimes. It happens to me sometimes. And sometimes I will just patiently wait. Sometimes come to hit my break even. Sometimes go to hit my target. So it happens like that. Now, if you can keep your journal consistently for at least 3 months, you'll be able to see how you can manage your emotions around certain trades. That is when you can have, with your journal, you can even make a playbook for your trading. If you have a good journal, you can have a good playbook, and a very good playbook is also very important for you to be a professional trader, guys. Now, like I said there, you have to keep records of your trades. Okay, write down how you were thinking, why you were on that trade. Like one of the easiest way how I keep records when I'm charting, like charts, when I'm looking at the chart, I tend to write constantly on the chart. Now, if something happens, if there's a huge spike, I write. I'll just type it on the charts. On TradingView, there is that feature there where you can text. So I keep doing that. And that's why on my charts, you see a lot of text sometimes. I'm literally journaling on the chart. Okay. It helps my mind. It helps me to think better. It helps me to think better. Now, number two, learn from every trade, win or loss. Whether it's a win, think of what you did that made you like, what did I do right that made me win this trade? So many people don't even think of it. All they have to do is just think about the money. I've just made $100 today. I've just made $50. They can't even think of what they did right, or so that they can replicate it, so that they can do it again next time. Okay. They can. I know the market is dynamic. What you did right today, you can do it. You can do that same thing right tomorrow, and still lose money. It doesn't matter. If you know that you can do that thing that you did to make money today, out of 10 times and win 7 times, then it's a good thing. Then you should keep doing that thing because the market is working random. It's a random place. Like it's a game of probability. You're not going to win every single time. Now, take time to study the charts. That is very, very important. Take your time to study the chart. If you cannot study the charts, guys, like laziness is also something. It's also something for most traders. Like I've seen so many of my guys that literally started this thing long time ago, but they were too lazy to do back testing. When I started, I didn't even know that I could easily use a simulation tool to like back test. I didn't know I could use a simulation tool to backtest. But until I figure out that I was manually backtesting, I would just scroll back to like 4 years ago. And then I'll on 1 hour time frame or 4 hours time frame, and then I'll start looking. 1 month time frame, I'll start looking 10 years ago. How does this market reverse? When the market comes to this turning point, how did it turn? Did it take out stop? How was it a fakey setup? Was it any kind of thing? I'll make sure I learn it. So take time to study the charts, and back testing and forward testing will set your edge in front of you. So many people are looking for their edge. You're meant to back test and forward test. You already have an edge. Some of us have an edge. The thing is that we don't know that we have an edge is because we are not back testing, and then we are not forward testing. So many people are randomly trading. They are just coming on the charts. They are not looking for anything. They have not trained their eyes or trained themselves to look for certain things in the market. So they just come and randomly trade. That is very, very wrong. That is very, very wrong. So backtesting, forward testing will build your confidence in the market. The importance of demo accounts, some persons don't know. Some persons feel that because a demo account does not have any emotions around it, then it's not important. Well, if you have $200 that you want to risk in the forex market and just use it to learn forex, you can forward the account, take your $200 as a demo account, and enjoy your trading, guys. But for me, I honestly think that when you backtest and even forward test, it will build your confidence around your strategy, guys. To build your confidence. Now, I've been able to tell you certain principles of price action trading. Number one, you need to understand turning points. You need to understand confluence and the importance of time and price. Time and price. I will not stress this enough. Time and price is very, very important. Like me, I don't waste my time. I know when to go to the chart. I know when to look for setups based on time. Based on timing, guys. So the next thing, I think that's all. That's pretty much all. Now, I said there is no holy grail in the market. There is no holy grail in trading. You have to be an insider if you want to avoid a loss. And when I say loss, I mean avoid like losses. If you don't want to see anything like losses on your trading, then you have to be an insider. Nobody's an insider at this point in time. Nobody's an insider. I'm sure they will never want to allow it. Like when I say insiders, I mean those persons that are behind it. Okay, you have to be like those persons to trade. There was a guy that was arrested a few months ago because he was stealing insiders information, something like that. So there is no holy grail in the market. If you find a strategy that works, keep doing it, keep repeating what works, and that is it, guys. Folks, I think I've been able to share with you the important things when it comes to price action trading. Number one, understand the market sessions, time and price. Number two, understand turning points in the market. How does this market turn? How does it turn? Number three, understand confluence. Number four, money management. If you want to win in price action trading.